Good evening and welcome to the Australian Stock Market Show. We do hope you've had a great week so far and are staying safe. The great philosopher Socrates once said, if you want to be wrong, follow the masses. And when it comes to trading the stock market, we know that 90% are not consistently profitable. So to be consistently profitable, just do the opposite of the masses. Tonight we'll share with you more of what the 10% who are profitable do, along with answering your questions as we bring you our upfront no BS approach to all things stock market. Our main topic for tonight is ASX stocks to buy as a hedge against rising inflation. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Hello.
Hello.
How are you today and what have you been up to? What exciting news have you got for us?
Exciting, yeah. It was a beautiful day in Melbourne today.
That's
sunny
pretty
and everything
exciting.
else. I went out for a little while.
Yeah, I was stirring people from WA and Queensland about that.
Were you?
Beautiful, one day perfect. The next, isn't it, in Melbourne?
Well, a lot of people say to me, what about the weather in Melbourne? I go, yeah, we have some. So that's pretty good. But I was just thinking about your quote, you know, and I was remembering, as you were saying, I was remembering back to all the conversations that I've had with stockbrokers right across the last 2.5+ decades, etc., and all the research that I've looked around the world. And it's when you talk to brokers, you know that 80% of their clients are losing, 10% are breaking even, and then 10% of their clients are actually making the money.
I wonder what happened to those people that made it out of the COVID pullback. That actually made, for the first time, it was the money that they had made from the stock market. They'd never been in it before.
But the 90% are not making money. It's consistently.
Yeah.
So just because you make money for a year or 2 years is not.
So what are you saying?
It's about long term. It's about 3, 4, 5 years. If you're consistently making money for 3, 4, 5 years, then you're not part of that 90%. But the majority are, and it doesn't matter.
Because the stock market has a low roughly every 4 to 6 years, as we know. And so because of that low, there's going to be times when people are not able to make that money.
Yeah, correct. And I mean, it doesn't matter which broker I talk to. When I had a broker ring me up last week saying, how about you refer people through to me? And I said, well, how about you refer them through to me first?
Yeah.
So they don't lose money with you first. And they went, what? And I go, well, 90% of your clients aren't making money. That's why you're asking me.
Actually, you'd think that it makes sense, wouldn't you? If brokers actually get their clients educated first, they'd actually hold
more money.
Long term.
Correct. Anyway, let's move on with the show. Well, before we get into our first segment for tonight, again, we'll take some live calls on the show. And if you do want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us. Now, remember the number you need to dial is 03 for Melbourne 92909988. That's 0392909988. Now, to get things started, the first person to call the show right now will get a free copy of my latest book. Yeah, a free copy of my latest book. Now, I know Janine and I are super keen to chat to you, so pick up your mobile phone and get dialing now.
While we wait for you to call, it is the 4th Tuesday in the month, and this means we take a look at the currency market. So let's get into the charts.
Now, I know this is your most favourite subject of the month, isn't it? The currencies, and on the chart.
Well, on the screen right now, we've
got a watch list of all the currencies. Now, stop.
Yep.
Just tame that enthusiasm, okay?
Okay, so all right, I better pick up
the mouse.
Yes, get driving. Is that what you're saying?
Get driving. I'll put my glasses on so I can see what you're doing.
The Australian dollar versus the Japanese yen. So I've got the monthly figures at the moment, and that's incredible. Look at that, 5.96% up.
Why
for
is
the
that?
Australian dollar? I don't know. I haven't actually paid any attention
to what's happening there. So the Australian dollar's risen against all of these currencies.
Maybe it's that post-games effect.
Could be, but I mean, the Australian dollar's risen strongly against all of those currencies except the New Zealand dollar.
Okay, well,
that's looking good.
Australian dollar versus US dollar, 3.7% up for the month. Australian dollar versus the Hong Kong dollar, up 3.5%. So look, the Aussie dollar is doing really well against the Asian currencies at the moment. You can see right down here against the Singapore dollar, the Chinese renminbi, we're up 2.68%. It seems to be across the board, which is great. And then we come down, I'm just going to skip down to the British pound, which is one of the currency pairs that we look at quite often. Yep. Australian dollar versus the British pound sterling, up 1.44%. Then we've got Australian dollar versus the Canadian dollar, 1.2% up. So I love Canada, don't you think Canada's just beautiful? You want to take a trip?
I do. I was going to take a trip, but I had to cancel it. I had a big trip planned last year, but it got cancelled, and I think I've been cancelled for years.
You're still crying over that, aren't you?
I'm still crying over that, all my holidays.
All right, Australian dollar versus the New Zealand dollar, we can still see it in there, is down 0.21. The New Zealand dollar is actually, doing really well. New Zealand overall has done reasonably well through the pandemic.
Well, it's done really good. I mean, we were at nearly $1.20 New Zealand for one of our Australian dollars not too far back, so it's done really, really well at the moment. But interesting to see what's actually driving this, though.
Yeah, let's have a look over the year. So we can see Australian dollar versus Japanese yen is up 7% still, which is fantastic.
Yep.
Aussie dollar versus the euro, 2.25% up. But then look at it, we've got a sea of red here. So it's really a short-term move we're seeing here on the Australian dollar. But when we look at the chart of the Australian dollar shortly, it does show strength overall, doesn't it? And
yeah, it does.
We've seen it move up along with what's happened in the mining space.
Yeah, and at the moment I can't explain why the Aussie dollar is actually moving up. Interest rates aren't likely to move up till probably third quarter next year.
Well, iron ore's dropped recently.
Iron ore's dropped. That was the other thing I was thinking of as well. And so, really, if commodities were rising in price, you'd think our Aussie dollar would be rising. But that's not really happening at the moment.
So how is that going to impact people as we come out of lockdown and more people are actually looking to go overseas at the moment?
Well, this is a big push, isn't it? A big push by all the travel agencies wanting people to travel, not just in Australia but overseas. And I was doing a CanStar research survey only yesterday about the Aussie dollar, and it was all about what we thought the property market was going to do, and it was all about tourism and travel, what we think we'd be doing, and when we would get back to 2019 sort of levels. And I still can't see a lot of mass people wanting to travel overseas, on blanket like they used to at the moment.
Think about the age, the elderly, right? The older people in our community, they are not going in droves to get on planes and go flying overseas.
No, they're not getting on cruise ships.
Think about how much money they were spending on cruise ships flying to different countries, whether it be the US or Canada, France. But they're not going to get those tourists.
No, that's what I'm saying in the survey. I don't think that's going to really get back because there's still fears.
Young people, I think, probably are more likely to take a flight and go overseas.
Correct. Yeah. So looking at this, we're going to have a look at one of the currencies, the chart of the currencies, or we're going to do something else?
I think that it'd be really good to have a look. First of all, let's have a look at the Aussie dollar versus the US dollar. And this is a weekly chart that I've got there. So you can see more shorter term that the currency's actually pushed up out of this low here that occurred in August 2021. So that's a nice little move, but we still don't have confirmation yet. It's early confirmation or an early indication that it may be rising. But if we see a strong move in the next couple of weeks, then our currency could be heading closer to 78 cents or 77 cents if that were to occur. If we see the next couple of weeks down, then I guess short term would indications would mean that it could take out this low here in October.
Well, the amount of money we're spending on vaccines that are coming from the US, that should, the US currency should be absolutely blitzing us at the moment, shouldn't we? Because we keep buying US dollars to buy their drugs.
Would think so. Yeah.
Billions of dollars. But anyway, so is there anything else you want to talk about?
Look, not on this particular currency, but just quickly, if we can go to the Australian dollar versus the Swiss franc, because that's something we don't often talk about. I thought that was interesting. Looking at the big decline that we've seen on the Swiss franc over time is quite different to some of the other currencies, isn't it? The way that it's unfolded. But it looks like this is a long-term low for it.
Yeah.
So if you were a currency trader, you'd probably be looking at that.
I would too.
All right, that's all from us on the currency markets. Now it's time to get into our first email for the night.
All right, our first email tonight is from Akther, who says, "Hey, Janine and Dale, I've bought the following VUL. Average price of $1.12. He sold half the lot at $5. He's also got a couple of other stock codes, NVX and CXO, which we're not going to talk about today, as we only do one stock. But what do you think of these stocks for long-term, 5 to 10 years? Should I take profit and invest in defensive value stocks, as these stocks yet to have any revenue, and we don't know what is the value of these companies? Regards, Akther."
So was he saying to take a profit, because I thought he'd sold this one?
He sold that one.
Part
he
of
bought
it.
it
He'd
at
sold
$1.12,
part
sold
of it.
half of it $5.
So he's asking whether to put the money, sell the rest and put the money into those other stocks.
No, he's already got those. He wanted us to look at 3 stocks. He was greedy.
Okay, right.
Okay.
So he's asking whether he should sell this one. Is that right?
Correct.
Now, looking at the chart, you can see that it's looking absolutely fantastic.
It does.
So you'd be pretty happy with that. Well, why would you be selling right now? given it's still strong. But I think the way to trade this type of stock has to be more shorter term. And it's one of those ones where he's obviously held on to some of that. And I actually think it was quite smart in actually taking some money off the table to protect his capital.
I do too.
And his profit. But at the same time, it's a question of where is he selling? So, you know, he sold half, but he sold it looks like when it was pushing up really strongly.
Well, we don't know. He doesn't say where he sold it. He just tells us the price. So
well, if I put a line across, I can see pretty much that it's
possibly
there.
sold it too early. That's what you're saying.
That's what I'm saying. So if he had a rule, perhaps he may have been able to get out at even better price. And looking at it now, I think that a nice little trend line. Yeah, I think a nice little trend line could go up there underneath that rise and potentially protect the run. But look at the monthly chart. You can see it looks hugely bullish at the moment. If it takes off next month above the high of this month, then it potentially could take out that high. But in saying that, we don't want to get him too excited, do we? Because what if it goes the other way? We have to always be thinking about that.
Well, he should have a line in the sand anyway. And that's what I'm thinking. But I like it. I'd stay with it. I think it's looking bullish at the moment. But, to me, good pick. Really well done. So, but we do have a caller now on the line. I believe we've got Torrin. Is that Torrin on the line?
Yes, it is.
Torrin, welcome to the show. Where are you from, mate?
Brisbane.
Brisbane. Oh, wow. Bris Vegas person. Well done. I don't think have we had anybody from Brisbane yet?
A Bris Vegas person.
A Bris Vegas person.
Is that a real Aussie thing to say?
It's an Aussie thing to say, Bris Vegas. Cool. All right, so she's not answering me, Torrin. You might have to. Okay, what's the stock you've got for us today, mate?
The stocks are Westpac.
Okay.
So I'm still learning at the moment. It's only been a few months that I've started getting into trading. And it kind of relates to Westpac, but also how Westpac strongly reflects the movements in the financial sector or other banks like NAB. So I currently I own Westpac. Thought for just a number of times of recent that maybe I should sell it at a profit at that $26 mark. But because there seems to be a bit of resistance there when we look at the daily chart. But also, Westpac to me has also gone below the monthly uptrend that it had. But despite this, my thinking really is that really I should probably maybe hold Westpac, because when I look at the sector as a whole, or when I look at even other banks like NAB, their monthly trend still seems to be pretty good. So I guess, is my thinking wrong in that maybe I should focus on really Westpac the stock, or is thinking about what the whole financial sector looks like, and that I do think in the future, Westpac is not.
Are you short, medium, or long term for your trade? What's your intention?
Well, it was originally I was thinking term, but no, I'm going to go long term.
Okay, cool, no problem. So do you mind if I ask you why daily charts if you're looking long term?
I look at all of the charts as curiosity, but I actually was when I first started looking at things. I started looking at daily. I didn't even realise you could change settings to look at monthlies and things like that. That's how I started looking at dailies. But I'm now turning more into, because obviously I'm still learning, but I'm really focusing a lot more now on the monthly charts there, and then weeklies, and then the daily I like to see, because you get still the movements that you can see in the dailies as well.
Cool. Yeah. All right, first bit of advice, Torrin, get off daily charts completely, you'll trade better. Janine, Westpac, what do you reckon?
I think we've brainwashed him.
Brainwashed him?
He's looking at monthly and weekly charts.
I know, it's great, isn't it? I loved it. And that's why I was quite happy to let him chat about what he's doing.
Excellent.
He's thinking about the sector, he's thinking about financials.
Oh, he's been thinking about some great things.
That Westpac and
putting it all together.
And Westpac and NAB.
Thinking about the financial sector and where it's going long term. Yeah, I like your thinking, definitely. So looking at this stock at the moment, I guess, depending on the time frame, and because we're talking long term, if it's still holding where it's holding and then it turns around and keeps going back up, of course you're going to stay with it.
Okay, so what are you showing? What are you showing us on the screen?
Well, on the left-hand side of the chart there, you can see the monthly chart. So the monthly chart's still showing that it's not going down yet. There's a bit of indecision there. There's still sideways activity happening there. And I'm glad that you pointed out to him not to focus on the daily chart for the resistance.
You wouldn't need to. You don't need to do that on banks. It's just not.
When he comes and does our course, he'll understand all of that from a bigger picture perspective. So when you're looking at the stock, look for a push up. Obviously, if it starts pushing back up and it heads above this high, then you can sleep well at night. You don't have to worry about it.
Can you put a trend line on that? Can you do that for me, please?
Are you looking for the monthly?
Yeah, you're on the monthly, so let's put a trend line on up underneath.
So you just go up there?
Yep.
Yeah, what are you thinking?
I still think it looks bullish.
Yeah, look, I guess if it actually took out this low here, you'd be thinking short term it's more likely to be down. I guess the only thing that I would, suggest is that when someone's, because he was wavering a bit about the longer term. Did you notice that at the end? So I was wondering whether, if, for example, the stock falls away, will he get a bit nervous and think, well, it's time to sell it? And on what basis is he going to make that decision?
Correct. That's the thing. I mean, he sort of did the opposite. A lot of people do. A lot of people say, I want to do a short-term trade. And then because they don't get that right, they turn it into a long-term buy and hold.
Yeah, which, I mean, a lot of people bought banks buy and hold thinking they should continue to hold it.
And I think he's done great. I like this, I really do. And I think, you should be holding on to this stock. Just use it on a monthly chart. That's really all you need. If you haven't read my book, get my book. Actually, you are getting my book because you're the first caller. So get my book. You're going to look at trend lines. Trend lines, this will tell you how to manage that really well and you'll make a mozza on it. So that's my tip for you tonight. Well done. Thanks for calling in.
Excellent. Our next email is from Daniel. Hi guys, just wondering what your thoughts were on the gold sector. I have invested in a gold explorer called GBR with plenty of upside, and it seems to have you guys seen or heard about GBR and your thoughts if you had? Daniel. All right. Daniel, thank you very much for that email. I always like talking about gold stocks, and you brought up a really interesting little one there. Quite volatile though, looking at it, looking at the chart on the screen right now, isn't it?
Yeah, look, it is super volatile, that one. It is really volatile, isn't it?
Yeah.
I mean, look at the volume that's coming down in here, through in that sort of April area. If I just expand that up, you can see the volume that's come through in this move through here.
Look, if it wasn't for this week's bar, I'd be thinking it was going to keep going. But this week's bar is a little bit of a game changer at this stage, and I'd just be watching a level somewhere around that point of, it's approximately about 130. 13.5 cents on the chart there.
So what are you talking about? You can have the mouse, you talk about it.
The screen's so far away from me, I have to use you as my eyes. You've got glasses on. How's that?
So what are you talking about?
Well, what I'm saying is that because this week's bar is so strongly down, the real risk right now is whether it takes out the low before. So I'd just be watching that. But if it turns around and goes back up at the end of the week, then that's a really positive sign for this stock moving forward. So would you buy that right now if you weren't in it?
No, I wouldn't be buying if I wasn't in it, but I wouldn't be too stressed if I was in it already. Whilst there's a fairly big percentage is lost, it hasn't proven it's not falling. It's just easing off a little bit.
And that's the risk and the challenge with these smaller stocks when you trade them. They could have a lot more downside before you actually get the exit. Yeah, interesting one. Now we have a caller.
So that was GBR.
We've got another caller.
I know.
How exciting. It's Simon. Simon, can you hear me out there?
G'day, Janine. Yes, again.
Fantastic. And what state are you calling from, Simon?
Victoria.
Wow, you're joining us with...
Lockdown Central.
Yeah, and also having to go from one day where you're freezing cold and you've got the jumpers to wearing the T-shirts.
Yes, well, I'm close to Ballarat, so I know all about that.
Oh, you'd be freezing there, shivering in your shoes at night, I'm imagining. Got the heater stoked. You've got a stock for us to talk about tonight, so would you mind just explaining what it is, what your question is?
The stock is Gem. I've recently purchased it, not based on the charts. I'm not really into that.
Not yet.
Not yet, anyway. I've bought it based on federal government policy, which should be improving that sector.
Okay.
Yep.
And the directors have been buying it up.
Right. So you've seen you've seen the directors purchasing it, and so have you bought it yourself?
Yes, I've just bought it recently at 95 cents. And I'm looking to hold beyond the next reporting season.
Okay, so you're a little bit concerned about it, or you're really quietly confident about it?
No, I'm quietly confident, but I was just interested in your thoughts.
Fantastic. Well, thank you so much for that question, Simon. That's an interesting one. Looking at the charts now there, you can see on the screen we've got G8 Education, which is GEM. Now, potentially, is this a long-term low? It could be, but it hasn't. It's really early days at this stage to try to confirm that, because if GEM were to pull back over the next, say, month or two towards this low here, then it really would be challenging to continue this trend down, and that's the real risk with it at the moment. But I would say that you've probably jumped in a little bit early potentially, because if it takes off through this high here, then that's really a good sign. It's more likely to keep going from there.
We bought where the blue line is, so he bought it down there.
Yeah, that's hugely risky.
It's huge.
Yeah.
It is too early for my body, but he wasn't using a chart, so he was using fundamentals, which is
But
great.
imagine if he packed, if he packed in the whole equation of using the chart and using the fundamentals
you
to
get
make
much better entry points
decision.
and everything else. But
Yeah.
Education I put almost in the barrel that I put airlines in, because it can be quite fickle, especially with stuff with government funding. Because as we know, they can change it just like that and you're gone.
Yep.
Obviously with international students, there's been none the last 2 years. So there's been a lot of issues around education. G8's a great company. I do like it, but I think it's a bit more fickle.
Okay.
Because things can change pretty quickly.
So a bit
But
more risky.
right now, I like his trade. I think it's great. I think right now it's got a little bit of short-term volatility, but outside of that, I think it's pretty good. I like it.
Okay, fantastic.
Right, we've got another caller on the line. I believe this is Christopher. Christopher, you there?
Yes, I am.
Fantastic, mate. Where are you from?
I'm from Adelaide, Dale.
Oh, well done. I love Adelaide, a beautiful little city. Have you got a question for us tonight, Christopher?
Yes, I have, and I didn't need to be the first caller because I've already purchased your book and gone through that, and I know
Thank
you
you.
like the reports to come back to that, but I thought I'd support the channel by buying your book and watching your shows and subscribing.
Thank you.
My question is regarding stop losses, because I know you one of your sayings is protect your capital and so on. But should you, if you're smart and educated and buy well, and your stock moves up, should your stop losses then move up to protect the profit that you've made on that investment?
Correct. Yeah. So basically, to give you an answer to the question, have you got a stock we're going to look at? Do you want us to look at a stock?
Well, the second part of the stop loss is how does it protect you when you have a catastrophic fall? And my stock that catastrophically fell was Mesoblast.
Gotcha. Cool. Two questions we got to answer there, Janine.
Yeah, interesting. Look, I
Easy.
have followed this stock from time to time. It is an interesting share and it is often talked about. And so this is the challenge for people who are reading things that people are writing about, these types of volatile shares, is they often get sucked into trades that a broker is pushing or somebody's got an agenda there. I'm not saying that was the case here, but it's just a warning for these smaller shares. I can see that big fall and I'm thinking, gosh, you must have been holding
We've
on.
got two questions. We got, if you buy a stock and it starts to rise, do you raise your stop losses?
Well, yes.
Okay, so you have a trailing stop loss. Which is,
so when they understand trailing stop losses, that's what a trailing stop loss will do. That's the theory behind it.
I think it's not even, you shouldn't even call it a trailing stop loss. It's basically protecting profit.
That's
it's
right.
not protecting a loss. So it's actually protecting your capital plus all profits you've made. So yes, in the trend line and other rules we have around all that.
I guess the simple answer is how could the stop loss have protected him in this case? Well, you wouldn't have gone through that sort of fall if you had a stop loss in place. But he didn't give us the exact date of when he bought it, and so it's not easy for me to work that out. So if he's talking about this area here, how could you would not have been able to set an easy trailing stop loss on a stock like that?
Sometimes with those, if a stock absolutely falls out of bed, sometimes it's SHIT just happens and you just get caught, and that's what happens. And we've all been caught on that on a trade, but they're the rare occurrences, very rare. Generally, the other time people say to me, oh, my stop loss didn't get me out at the right place, and it's because they were using the wrong stop losses for that stock. And sometimes, probably the easiest way for me to explain that is some people will trade really volatile stocks using a stop loss that should be just for a blue chip stock, or vice versa. So, they try and use. I know I've had people trading blue chip stocks using really reactive stop losses for volatile stocks, and they keep getting stopped out a lot. And they're going, "Why am I doing this?" I go, "Because you're using the wrong stop loss for the wrong stock." So it's using the right stop loss for the right reasons and the right stock. But I'd say this was just SHIT happened. And in that case, you just look at it and then you do a technical analysis of it and fundamental and go, well, is it worth now holding on or do I exit, really?
Well, I guess the point is, has the person held on past the point of when that happened? And why? You can see here it had 2 times where this stock has actually reacted this way.
Correct.
I guess this is where the chart's important, because if it had ever done it in the past, which looking back here, you can see what happened in COVID. For a start, you would just be wanting to have a look, if we go to, March? So in February, which is when COVID hit, and that's how we measure how stocks perform. It fell actually nearly 65%.
Yeah.
Which is, the market fell 40%. So that's 50% more that this stock declined, and that tells you what could occur.
So therefore you'd set a stop loss that's congruent with how that stock travels.
Correct.
So you'd be setting a lot tighter stop loss and possibly a volatility-based stop loss or something else that would be triggered quite quickly. So that's what I was saying, is using the right stop loss with the right stock. And so it's understanding how the stock's personalities. I think that's what you're saying.
Yeah, because the last thing you want to see is to have a really nice move up, like what we saw on this share into September 2020, and then to watch it drop once, not just once, but then twice, and then you're riding it down to here.
Okay, how many times have you seen people or heard of people, or they've emailed you us questions and said, I keep getting stopped out of this stock, or I've had this happen and got stopped out?
If the personality of a stock is such, then I potentially move on to another one.
Yeah, but how many times have you heard it and they've not done the stop loss correct?
Properly, yeah, okay.
Yeah, and that's what I'm saying, is most people get it wrong.
Okay.
And that's really what it is. But let's move on. That's enough for whatever. Mesoblast, I think, wasn't it? Yeah.
All right, we actually have another caller. We had Vishal on the line, which is great to have you on the line. How are you today, and what state are you calling from?
I'm good, thank you, Janine. Yeah, I'm calling from Sydney.
Okay, fantastic. Another Sydney person. And how is it up there today?
It's actually been a pretty good day today. Beautiful weather.
Lovely. And you've got a stock for us tonight. What's your question, please?
Yep, so the stock is called Lithium CXO.
Okay, lovely.
I've bought this stock at 35 cents. About 50,000 units, and I've scaled in on it a couple of times on a pullback.
Right.
And at the moment I'm holding about 82,000 shares.
Okay.
And I'd just like your thoughts on the stock, see if there is any more left in it, or has it reached the peak?
Yep.
At the moment I'm up about 45%, I think.
Okay, my first question is, you've scaled into it, so you've obviously had some strategy to get in. So what about your exit rules? Do you have one? Do you have an exit strategy?
Yeah, so today I've set up a trail at 15% at on the closing price today. And that's basically where I'm at the moment. It is quite a big trade for me. And that's basically I've just come up with.
Okay, awesome. Look, thank you very much for that question. Let's have a look at the chart now and see what that's telling us. So you can see there on the left-hand side is probably the best picture of this stock. Nice little lithium share, and it's been trading sideways for quite a while before jumping out. Now, my mouse doesn't want to behave itself. There it is, it went crazy. You can see there this big sideways move that happened here between going back here to March 2021, and then we've got, this is the weekly chart, between March 2021 and July 2021. So I've got the weekly twice there. There we go, a bit of duplication.
That's my fault. I think I saved the template wrong.
No, that's okay. And so you can see that sideways move now that it's condensed, and just the effect of that big move up. So I can see why he's a little bit concerned about his profit right now, because it's not a profit until you've banked it.
Correct.
That's the thing. So looking at the way that it's moved up is really quite beautiful. It's actually showing signs of strong support. I wouldn't be too concerned about this share right now. The only thing that I would be saying is, I think, what else could you do? Because it's just gone straight up. It's just blown away from where it was trading sideways. What else could he do other than a percentage stop?
Can it go further? And I don't think that's the right question. I think the question is what is my exit strategy, and keep trailing that up underneath it, which he's done. It's why, because if you didn't ask him, I was going to ask him what his exit strategy was, and he said it's 15% below the closing price.
Yep.
And I think as long as that's there, then who cares how high it's going to go? It's as long as you've got the stop loss there, because this could double, or it could go up 50%, or it could start going down from tomorrow.
Yeah. Now, hopefully, it doesn't fall quickly, like an example of the other
stuff. But I think he's done what he needs to do, and this is where a lot of people try and set, this expert says it's going to go to $1, so I'll hang on till it gets there, and it drops down a little bit, and then they go, oh no, it's not there yet, but I'm still hanging on because the expert said it's going to go to $1. And they get stuck in this idea, whereas let profits run, cut losses short. That's the golden rule of trading. It's as simple as that. So while it's going up, stay with it. If it goes down, just get out of it, pretty much from that point of view. Anything else you want to say on this?
No, I think that you've covered it well.
All right, well, before we get into the topic for tonight, if you are enjoying the show, then please hit the big like button now. so others can find it and enjoy it too. Now, if you are keen on understanding the stock market, then go to our website, wealthwithin.com.au. There are lots of free articles there, podcasts, you name it. And you can also get a copy of my first book, How to Beat the Managed Funds by 20% for free. You just have to pay the shipping. Now, later on in the show, we're going to give you another opportunity to call into the show like these other people and ask Janine and I your most burning questions. So stay tuned for the opportunity, and more importantly, be ready to dial when we tell you to. Okay, now it's time to get into tonight's topic, best ASX stocks to buy as a hedge against rising inflation.
If you've been getting concerned about the spike in Australia's annual inflation rate, which has now risen to 3.8%, then you're not alone, as we're hearing too many Australians are struggling with the rising cost of living. We're also getting questions as to how rising inflation has the potential to erode your investment returns and what you can do about it. So that's why tonight we'll help you understand inflation rates and how they may affect your investments. So we'll look at the inflation statistics along with a number of stocks that we've chosen for you that have potential to offset the effects of inflation on your portfolio. If you've been watching the news, then you would have seen that some analysts are predicting inflation could remain between 3.6 and 3.9% for some time. Earlier this year, inflation spiked to 3.8%, and the Reserve Bank actually sets a target range of 2 to 3%. They believe that inflation will quickly return to that lower level.
Okay, so why is it important? To put simply, if prices rise, we have inflation. If they fall, we have deflation. Now, rising inflation means we as consumers pay more for things, but so do companies. So if costs rise for companies, they can pass them on to the consumer, and as such, company profits are unlikely to be hurt. Now, whilst this sounds really, really simple, it is more complex, as some companies are able to pass on costs much better and quicker than others. Now, first off, let's take a look at inflation rates over history so you have an understanding of how the inflation rate has changed in recent years. Now, we know inflation spiked in Q2 2021, and this sparked concern amongst investors as to whether this would continue, and was the spike just an aberration related to COVID-19.
As you can see on the chart, inflation remained low for a long time. The last time we saw a spike to current levels was in 2008 during the GFC. Prior to that, inflation got out of control in the 70s and 80s. But in 1993, the RBA introduced a target range, and since then inflation has generally been managed within or below the range. Now, you're probably asking what things have an impact on inflation. Typically, food, fuel, and of course, issues with supply and demand. More recently, the main causes of the spike have been COVID-19 lockdowns and closed borders. We have experienced increased fuel prices as oil's been trending up, and so have food prices from meat to fruit and vegetables because of a lack of supply. We can add that to the effects of heavily subsidised childcare as part of a government package, and there is the cost of construction and materials which are rising due to low supply and the current housing boom.
Now, currently the RBA is expecting that inflation will come back below 2% by the end of the year. Now, discussing whether the inflation rate will fall back to where the RBA predicts is not really going to help you that much. Now, remember, what is most important is not what happens, but how you handle it. For investors, there are always things that occur outside of your control that could impact your portfolio. As savvy investors, what you need to do is give thought on how you might address the potential adverse effects of inflation and other risks.
This means you need to have a plan, and the best defence, of course, against rising inflation, if it occurs, is to have stocks on your watch list that you can buy or continue to hold, stocks that help you offset the effects of inflation. These stocks are typically companies that can easily pass on the rising costs, and we're going to show you some of the examples of these. So let's take a look at the charts.
All right, so you got on the screen, you've got Coles. So obviously, why is this one one that will hedge you against inflation? So explain that.
Now, in theory, the supermarkets can pass on costs. Now, there is a proviso in here. We've seen meat prices go up, for example.
We have. Yep.
And we've seen vegetables go up. Now, people are more or less accepting of the fact that they're going up everywhere. But the one thing is we've got significant competition in that space as well. So that you've got the likes of Safeway, you've got Coles, you've got IGA, you've got Costco,
you've got
Aldi. There's a whole lot of different companies in that market at the moment. So that could have an impact on whether it's just a blanket, buy a supermarket or buy a Coles or a Woolies, and that's going to help you hedge inflation. There's a little question mark over whether what's happening with inflation right now, post-COVID, is going to be normal, if you like.
Yeah, but when you get into depressions, pretty much, I suppose, or recessionary environments, the things that you can rely on are food, shoes, clothes.
Yeah.
They always perform all the way because people need somewhere to live.
Yep.
They need food. And they need shoes.
And is it women still buy lipstick in that environment?
Yeah, I think at the other one, looking at some socioeconomics, women still buy lipstick because it's just a little thing that they can buy to make themselves feel better in a recessionary environment. But we won't get into that as well. Okay, you might end up elsewhere.
You'll get in trouble.
So food, Coles, obviously they can pass the cost on pretty quickly. I know these supermarkets
Coles is going to be a more defensive stock anyway. So for an inflationary environment, I think that they will be able to quickly pass on those costs, and I have seen it in the supermarket. So, we shop at Coles, Safeway, and from time to time IGA, and I have seen these costs being passed on to consumers.
I know, and it's really hard to sort of quantify when they're rising the cost because fruit and veggies and things like that always change price, don't they? I mean, milk generally doesn't, but fruit and veggies and other consumables generally do. And it's like, okay, you're paying $2 for a lemon last week, you could be paying $3 next week.
Yeah, but with the COVID lockdown, it was hard to see what was actually anything to do with inflation and what was more COVID.
Okay, so do you like Coles long term?
I like Coles long term. I think the important thing is when inflation kicks in initially, often we see a bit of a slowdown happen in the stock market. But where are you going to put your money? So to hedge,
put in cash.
As a hedge against inflation anyway, you're better off to have money in assets that are growing. So it's property, shares. So we've seen the property market take off already. We've seen the stock market doing well. Interestingly, though, we've seen tech stocks pull back way before all of that happened, almost in anticipation of that. Perhaps, and we've got a mining sector that's been sold off.
Yes.
So, if you had the mining sector being really bullish and you had the tech sector still bullish and inflation started to kick in, then I'd be more concerned about it. But because we don't have that, that's where, to me, the waters are a bit murky.
Yeah. Okay, so Coles is one you like long term?
Yep,
okay.
So Coles, look, I'd like to see it actually take out this high here. That's really important in the short term that we see that happening. I think Metcash is another one, so that's another stock that's interesting, and I've left some of my analysis on the chart there.
That's right, everybody wants to work out what you're doing.
Yeah, so let's just hide that. I could explain it. Can I go into the detail? Have we got time for that?
No, because we haven't got time. We'll be here till midnight, you explaining it.
Okay. All right, so let's just...
Queen, have a chat.
Okay, yes, that's right. When you're looking at the monthly chart of Metcash, it's obviously had a lot of growth already. So we're looking at the left-hand side of the chart, and we can see that it's well past all of that initial phases of when Metcash was in that really nice, strong uptrend. The trend hasn't been as nice more recently, but it is in a nice uptrend now. And I think there's further upside potential for this stock, looking at it going forward. It could be, above $485 in the near term. And I think it looks nice.
I do look nice. And so what's the next one?
All right, so the next one we're looking at is AGL, a bit more controversial.
Yeah, it is, isn't it?
Yeah, because, you'd probably like to talk about that, would you?
Well, I just look at it. I look at when you're talking about things like we said, people need food, shoes, housing, clothes. That's what they need.
Yep.
They also need to turn lights on.
Right.
They also need to have gas.
Internet.
You don't have to have internet. You don't die if you don't have it. But if you don't have heating in your home, if you don't have lights, it's a pretty dismal lifestyle. And so these are the sorts of things like AGL and some of these energy or
There's so much competition in that space.
Yeah, correct, there is. But then, you make more money in recessionary environments than you do in boom environments because of what you do. But in an inflationary environment, it'll affect their share price, I think, and it'll be nice stable income coming through.
Well, it's too early yet for AGL, but it's one to keep an eye on.
Yeah, but I do like it long term.
So we're not saying you've got to go out and buy all of the stocks now. That's not what we're saying. We're saying that these are stocks to watch and when they actually trigger to look at for opportunities. Now, Telstra's actually pulled back.
Yep.
So it's about waiting for the next opportunity and being patient with it, but in the not too distant future. This stock, we talked about this one I think on last week's show.
Yeah, we did.
There was some downside risk and it could continue to fall further, so that's the short-term downside risk.
Could be bearish, yeah.
Yeah, but I mean if it just continues to move up over the monthly time frame and starts moving on, it could turn out to be a nice long-term play.
Yeah, look, I think over the next 10 years this thing will do really, really well. Just short-term is a bit of weakness.
The only thing with Telstra is if something negative happens, then it's like, here we go again.
Here we go.
So you've just got to be mindful of that. Don't just assume that Telstra is going to do well and hang on for grim death, because I think some people have already done that.
What do we got? A couple more stocks?
All right, the next one, Newcrest Mining.
Nice stock.
A gold stock. Now, this is a more volatile stock out of the miners, but funnily enough, it's one of the biggest stocks on our market. So, this would be, gold in theory is a good hedge against inflation historically, but then why aren't the gold stocks already going up? There's your question there. So there's a lot of talk about cryptocurrencies and whether money has actually flown out of gold and assets like that and has flown into cryptos, because there's only one pool basically of the money, which can expand as more leverage starts to be taken up in the marketplace. But we haven't seen a massive draw on that like we saw pre the GFC yet. So, but looking at this stock, I think over time it could be a good opportunity, but you have to have your wits about you when you trade this one. It's not something that you want to put in the bottom drawer. Long term, it's not a long-term play.
Okay,
no.
Cool. All right, so the next stock?
So the next stock we've got is the final one. So we've got JB Hi-Fi there.
Oh, I love this.
Now, retail, we're talking about buying things. You don't have to have a new TV, but this is where the waters are murky at the moment because of COVID. People have, and they haven't been able to travel. So people who have actually remained employed, or people who are potentially retired who are thinking, oh, well, we may as well spend the money at home, are going out and they have the potential and the purchasing power to go and buy electronics. Now, what you said on a previous show is that a lot of people, whoever was going to buy electronics, extra computers, TVs, may have already done that last year. Well, this is what we're waiting to see, isn't
There's a new MacBook Pro out.
Ooh.
And there's a new iPhone out.
And all the tech heads are going, yeah.
And all the tech heads are going, and they're going, I don't want that product.
So we're looking at this stock at the moment, and look, it looks good in the short term, but it's part of a big sideways move and it can always get tipped over and we could see it actually tumble. So that's the short term risk. Just because somebody says, oh, inflation is happening and therefore you need to go and invest in stocks that hedge against inflation, doesn't mean that they can't keep falling. So it's about matching what is being said with what the chart is actually showing.
Yep.
So right now, it's early days yet for JB Hi-Fi, but there could be a nice little trade in there.
Yeah, I think there could be a nice little trade in. I do like the stock. It's I think you've got a real good spread of different stocks for people.
Yeah, so I think not just that with the stocks, we've got them thinking about different issues, and I think that's really important.
So there you have it. We've addressed another risk to your portfolio that you will from time to time experience. Now, hopefully we've started you thinking about some stocks that may help you stave off inflation. Now, your research doesn't end there. It's up to you to come up with your own list of companies. Also, we're not suggesting that you buy and hold these stocks. It's still important to trade on confirmation of your rules, as this is the number one when managing risk across the portfolio. Well, that's it for our topic tonight. Now, before we get into our next email, I hope you have your phone ready and have been waiting patiently for the opportunity to call into the show to ask Janine and I your most burning questions. So now's the time to get dialing. You know the number, the call 0392909988. That's 0392909988. So get dialing now.
While you call us, we'll get into answering the next email. I think I've got tongue-tied there. So call now.
Okay, the next email we have is from Adrian, who says, "Hi Dale and Janine, handsome crew." Well, the crew get a thumbs up. Well done, they're whooping out. I'm watching AGL patiently for bottom and uptrend. would the almost double volume in September, 194 million shares traded, indicate that could be getting closer? It certainly stands out. Thanks, Adrian. Let's go and have a look at AGL.
Look, we've just spoken about AGL, but yeah, like you say, let's have a look at a bit more of the longer-term picture first.
Talking about,
or I'll come back to volume.
Okay.
First of all, I just want to look at the potential that he's talking about.
Right.
So I'll put the this little crosshair on so we can see across the chart there. So it looks like right now, long term, this stock has come down to an important level. But it's not to say AGL could keep going to there.
It could.
You know, you can't rule it out completely, but in the short term, there is a potential for a turnaround.
It could be finding
That's the point, isn't
soon.
it? Yeah. So what we're looking at now is then the shorter term, so the volume he's talking about, this huge amount of volume that's come into the stock. So generally, during the pullback, you can see here over to the left-hand side of the chart, in March 2018, there was about 10 million shares traded, right? This is in a week. And that was fairly typical across the weeks that continued by. But then we went into 2020 when COVID hit. And of course, volume rose with the sell-off, not hugely so, but it still did. Now we've seen the biggest volume, bigger than COVID, coming into this low here. So is this, people, opportunists trying to pick a bottom? And
it could be.
And it could be short-term profit takers too that are trying to take a big position in there.
It could be, but often when you see big spike volume like that, it can indicate an end of a trend both up and down. But not always.
Yeah.
So that's where what you just said before is trading on confirmation, not speculation.
Yeah, well, so let's just have a look at the history of it for a minute. I just want to go back and see, has that happened in history for this share? And there was a spike volume that occurred here. Now, I haven't looked at what actually occurred, but this was February 2006. Now, the stock was travelling up. It wasn't it was a turn there, but not a significant one. So it doesn't, like you say, it doesn't necessarily mean that that's going to be the turning point.
Okay, so too early at the moment, but stay watching it. I think that's the answer,
Yeah,
isn't
but
it?
really good that he's watching out for these sorts of things.
Cool. I believe we've got a caller on the line. Is Rob there?
Yep.
Rob, how you doing, mate?
Yeah, well.
Good.
Thank you.
Where are you from?
I'm from New South Wales,
New South Wales. Where in New South Wales?
in Olbar.
Alba. I've never been there, but I think I'd love to come because you're
Oh,
there.
it's beautiful.
And you'd buy me a beer, wouldn't you, Rob?
I would.
Cool. You got a question for us tonight, Rob?
I've brought Little Green Farmer a couple of times on the way down.
Awesome.
Yeah, and I've just seen your show the other day about cannabis shares.
Yep. Perfect.
Yeah.
Yeah, so you're in the cannabis shares. So you're a trader or you're more of an investor?
I'm an investor, but I just love their story.
Okay, cool. Yeah, I love Little Green Farmers, their story as well. So I think we're brothers from another mother, right? How's that one?
I like it.
We'll get Janine to have a look at the Little Green Farmer.
All right, Rob, looking on the screen there, you can see we've got LGP as the stock code. Now, on the left-hand side, I've got the weekly chart, which is awesome, which I'll quickly change to the monthly. Now, you can see that when I've compressed that up a bit, what's been happening over more or less the last 6 to 8 months is just a sideways move. It's coming back to test that support, and it's really a question of, whether there's going to be enough buyers behind it to push it up. It really needs to get going through this high here in September 2021 to prove that it's going to rise. So the risk is right now, if it takes out that low in October 2021, it could continue to fall. So I guess the point here is don't fall in love with the story. Wait for the stock to actually be moving in the right direction and confirm that it's going up. Because I've heard stories of some people, they just wake up one day, they read an article and think, oh, somebody's talked about this particular share. How fantastic, I need to get a piece of that action, and they go out and purchase shares based on that, which the share could be in the middle of a downtrend and a high risk time to purchase. So that's really a reckless way to purchase a share. It's about your risk first, not how much money you can make, even though the story is good around Little Green Farmer. I would actually wait for it to start moving back up before looking to purchase it.
Yeah, look, I would too. I mean, if you're looking at the screen right now, you can see I've just drawn that little green box there because it's Little Green Farmer. But you can see all the opens and closes are all in that little box. So this area is pretty strong in terms of support or resistance. So what you're saying is if it falls out of this, then it's likely to come way back down here. So I would just set a stop loss on that and really make sure that, look, I wouldn't hold this long term at the moment.
Yeah.
I really wouldn't.
Okay,
Yeah.
fantastic. Now we have a question from Victor. Hi Dale and Janine, thank you for inspiring show. I'd like to follow your recommendations and learn the hardest step within the trading, the selling part. However, I'm quite struggling to find good charting software, at least similar to yours, and I don't want to spend thousands of dollars on it, at least not yet. But I can't help it. The charts on the ASX look different. Could you recommend some and where to get them from, please? My priority is to learn the exit signals. Thank you both. Have a great day. Best regards, Victor. So what would you say to Victor?
Look, you don't need we use Optima, and it's an advanced charting package. It's for people that are super serious, and it costs you over $1,000 to buy it. If you want to do our diploma course, we're throwing it in at the moment, so you can get it through us by doing your course. We will throw it in for you. So if you are thinking about doing our course, give our guys a call and tell them Dale said you can have the software included. And they'll love you for that. No, they won't. But if you're just starting out, you don't need sophisticated software like this. There's some free software that you can get, like online portals, like incrediblecharts.com.au and bigcharts.com are two places you can go. They're not going to be as great as this. Online charts never are. And I know a lot of people look at broker platforms and they go, oh, this is a charting package. And I get them all the time, and they say, here's our software, and it's got 500 indicators in it, and it's got this and this and this and this. And I go, I don't need all of that. It's really what I need is the software like we use, because Janine and I are quite highly educated and highly skilled traders. So therefore we need better tools. But you can saw a piece of wood with a hand saw, you can saw it with a jigsaw, you can saw it with a circular saw, you can saw it with anything you like. But it's this thing that needs to be trained first. So learning how to do the stop losses is more important than the software. Just go to one of the free ones and use them online, and you'll be fine.
Yeah, look, I guess it depends on the intention and whether, and also how much money is investing in the stock market.
Yeah, he's a beginner.
On the one hand, if someone's sort of saying that they don't have much money and they want to start out, I'd say that. But I've spoken to people that have hundreds of thousands of dollars and they're worried about spending, $1,000 on a piece of software, which to me is just nuts.
I've had millionaires tell us that 12 grand was expensive. I've had, it's amazing how much people, it's all relative, isn't it?
It's about the mentality, that poverty mentality thinking. Someone could be completely rich and then not spend any money.
Well, it just makes sense. If you're taking it seriously, you buy the good tools.
Okay.
But if you're just starting out dipping your toe in the water, you don't need to have the best tools.
Yeah, because I think when you started out, you were hand printing off charts.
I was drawing them all by hand, and I was printing them out of faxes, and I had multiple pens and colours all over my hands because I'm left-handed and I was getting streaks all over my hand from running over. But that's what I did because, I didn't even have a computer. Now I've got whiz-bang computers and everything else to help. Yep. But you don't need that. Just go to the free ones like Incredible Charts or bigcharts.com.
All right, we have another caller. It's Lee on the line. Hi, Lee. Where are you from?
Melbourne, Janine.
Oh, fantastic. Join the club. So you've just come out of lockdown. How do you feel?
Yippee.
Yes, you betcha. It's been a long time coming.
So what's the first thing you did out of lockdown that you couldn't do before?
I went and did a bit of shopping, actually.
Oh, that's the last place I'd want to go. But look, each to their own.
Pretty hectic, but...
And you've got a stock for us tonight. Would you mind telling us what your question is, please?
Yeah, I'm looking at PH2. I took it some months ago, and it had a very busy day today, and I like it long term. But some thoughts from you guys would be much appreciated.
All right, Lee, happy to do that for you, and thanks very much for sharing your little story about the shopping, and I hope it was a good one and you didn't spend, go crazy.
I was going to say, what did you buy me?
All right, Lee. Thanks very much. We'll have a look at the chart for you right now.
Thanks, Lee.
All right, we have on the screen there Pure Hydrogen Corporation, lovely little stock there. Look at the move off that bottom on the left-hand side. You can see this is on the week.
It's a big move this week.
Oh, you've changed it. You've tricked me. It's the monthly chart.
I've tricked you now, yeah.
Very well. Yeah, geez, you're a good assistant. Did anybody tell you that lately?
I'll start dancing later.
Okay. So you can see that nice little pullback and the nice push out of the blocks. Oh, that's lovely. 3 weeks up. That's just great to see 3 strong weeks up. And you can see there how the stock's pulled back nicely to test that support. I think it looks amazing.
I've been studying hydrogen power lately, like hydrogen for cars and things like that. And
I like this. The challenge is going to be being able to get out of it at a decent price. Now we can use history to tell us what to expect. So I'm looking for my tools there.
I know.
And I'm running
I
blind
know,
here.
we're using a different computer tonight because the other one decided it wanted to go to the shop.
Yeah, let's have a look. We can see here it's just gone straight down around 50%, isn't it? So without giving any sort of a signal on the weekly chart to get out of it. And I guess that's the challenge with these sort of shares. So would you, in this case, when you're dealing with this sort of volatility, would you look to protect your profit on the daily?
Look, I'd still stay on the weekly. I really would. I mean, it's not a highly liquid stock, but it's it is moving in the right direction. It's looking strong. I would set a trailing stop onto this one myself.
Because even on the daily chart,
this is a great area too.
It did lose a lot off the top. You know, you could come right down here. You might have been able to come down here, but look, some people try to set trend lines on daily charts, which is crazy.
Well, that is a bit crazy, but that sort of gets back to what I was talking about before, using the right tools for the right job.
Yeah. So looking at this, okay, if he'd hung on to it based on a monthly, he's talking long term. So if he held on to it based on the monthly chart, he'd still be in it.
Yep, I'd still be in it too.
It could go all the way up towards $1.
Yeah, I like it. I think, well done, matey. I think, geez, that's a pretty good pick.
But have a stop loss.
But make sure you put a stop loss. Now we've got another caller on the line, Alex, I believe. Alex, are you there?
Yeah, I'm here. Yes, I am interested to buy some stock they call Central Area Industrial REIT. CIP, something.
So the stock ticket code is CIP. Is that what you're saying, Alex?
Correct.
Okay, and you're looking to buy that?
Yes, I am.
Okay, are you long term or short term?
I'm looking for long term.
Long term, so over 5 years?
Yeah, probably, you're right, yes.
Okay, cool, fantastic. Well, let's go and have a look at CIP for Alex.
All right, look, for a start, would you hold a stock like this over the long term, over 5 years?
I don't know, would you?
No.
Okay, so there you go. Why?
Well, not unless it was one of the big stocks. I wouldn't consider that. Just because of the volatility of a share like this, although you do get some protection in the REIT space because they tend to be less volatile. But look at what happened to the big REITs in the GFC.
Yes.
Can I just, do you mind if I go to another chart? I just want to demonstrate.
You're explaining something that Alex can work on. Absolutely.
Yeah. Now, this is a stock that's different, of course. So I'm not saying that I'm comparing apples with apples by looking at Stockland, but a lot of the big REITs, when they pulled back, or the property stocks, whether it's a REIT, property stock, property trust, they pulled back massively in the GFC, significantly more than the market. Look at what happened in COVID. Now, GMG was one that was slightly different because it was much more defensive. So you've really got to pick the right REIT for the time frame. Now, so far we don't have a lot of history. We can't see back to the GFC because it wasn't trading at that point. So we don't know how it performed in the GFC. We can only see what happened when it went through COVID. So now, looking at the pullback with COVID, we see it was more or less in line with the market.
Yes.
So that is a positive sign for this share in that. So I would say...
It looks good.
Yeah, so if he was holding it, I would say...
No, he's wanting to buy it.
If he's wanting to buy it, I would say, look, not right now because it's pulling back.
Yep.
So I would actually wait till it actually proves that it can get back above that $4 mark strongly. And once it does that, I'd be a bit more confident about the direction.
Okay, cool.
All right.
Anything else you'd like to say about it?
No, that's all.
Oh, okay. Geez, you sure?
Short and sweet.
Okay.
Yeah, so you've talked about lots of stocks in the past in this space.
Yeah.
So we've got Stockland, Mirvac as big property stocks, but we've got some of those smaller REITs that are in the marketplace as well. That Charter Hall's another one, isn't it, that's done incredibly well?
Yeah. All right, so that's it for this stock. So we've got something else?
All right, we've got another call. Oh, my goodness, the lines are going crazy. We've got a lady. Thank you very much, Vera, for calling in. How are you today and what state are you from?
Oh, hi. I'm from Sydney.
Sydney. Wow, fantastic. Oh, look, I think Sydney's winning the race at the moment, aren't they?
Yeah, probably.
New South Wales are winning. Vera,
Yes.
Vera, good to have you on the show. You've got something for us to chat about tonight. Would you mind sharing with us what your question is, please?
Yeah, I'm just looking at investing in ETF for my self-managed super fund. You know, I haven't get in yet, so I've been watching. So if you can help me out, you know, I want to be a long-term for the SMSF.
Fantastic.
So I'm looking at IOZ.
And that's one of the ETFs that you're looking at. So you said you've got other ETFs. Have you got mainly ETFs in a portfolio?
Not yet. I haven't get in yet. So that's I'm watching a few of ETF. You know, some of them like Vanguard, VAS or something. It's all like S&P 500 or the index ETF.
Okay. Would you mind sharing with me? Have you ever bought a share before?
Yeah, a long time ago, more than 10 years ago. So I stopped, and then now I'm starting to, to invest long term instead of like a trading. But I need to refine my skill again, and I need to read your book, I think.
Fantastic. Okay, good for you. All right, we're happy to have a look at this for you. Thanks very much for your question, Vera.
Thank you.
All right, let's have a look at iShares core S&P ASX 200 ETF.
Yeah, it's an index ETF. Yep.
So you can see now. I know you've got a lot to talk about when it comes to index ETFs.
No, I don't.
Yes, you do.
No, I don't.
Yes, you do.
No,
I'm going to let you. I'm going to let you talk about it from a point of view of whether people should invest in index ETFs and how to use ETFs. I mean, clearly Vera has been trading before, so she knows a bit about the market and has had experience in the market before, but she didn't really say whether her experience was a good one or not, but hasn't done much for about 10 years and is now looking to venture back in. So what do you think about iShares?
I'd be saying buy my book and buy top stocks on the marketplace.
Top 20 shares.
Yeah, look, I dislike index ETFs because they're sort of, I won't say it's like a lazy way to invest, but you just don't get better returns. It's if you're talking about specific areas such as robotics or even cannabis stocks or alternative energy stocks, those sorts of areas where you do need a bit more of a specialist knowledge. But if you're just looking for a super fund and you just want some really good consistent returns, then it's really hard to beat the top 20 stocks on our marketplace, because if you look at the top 200...
But you're not saying buy all top 20?
No. I'm just saying buying a good portfolio of those top 20 stocks, so maybe 8, 10, 12 of those stocks.
So which book is going to help her the best?
Either one.
How to Beat the Managed Funds or this one?
Either one will do it. Either one will help her to do that, because if you're looking... Okay, the top 20 stocks, how much of the All Ordinaries Index are they in percentage weighting?
Oh, I don't know off the top of my head at the moment.
Yeah, so if this ETF is going up, it's because the top 20 are going up. That's really what I'm saying is, so you may as well be in the stocks, get dividend, and you'll get better returns. That's pretty much what I'm saying. But if you do want to buy an ETF, it's an index ETF, then I don't have a problem with that. You need to read all the details and the fine print, because what I find a lot of people don't do with ETF is read the fine print.
Right.
Because they can stop these ETFs at any one time and pay you back the money and do all sorts of little things with that. And that's all. You need to understand the terms and conditions of what you're investing in. Just don't think because it's on the XJO or the top 200 or the top 500 or whatever that is, that it's okay. You need to understand which one you're investing in. But they're all pretty good, aren't they?
Now, obviously, if the market pulls back, then this ETF is going to pull back with it.
Yeah, it will.
So
Correct.
It's not about buying an ETF thinking that you're safer.
No, you just buy and sell like you would a share.
You still have to have rules.
Correct.
Yeah. Okay. Awesome.
Okay, well, that's our thoughts on ETFs for tonight.
All right, if you called into the show and you missed out this week, then keep trying, as we'd love to chat with you, and just make sure that you write your question down and be back here watching the show next week, as you'll get another opportunity to call in when you get given the cue.
Now remember that the best way to have your question answered is to call in between 7 and 8 p.m. every Tuesday. Otherwise, email your question right now to info@wealthwithin.com.au. Remember, include Wealth Within Live in the subject line. Also remember, in order to show your appreciation for us helping you by answering your questions and educating you, all we're going to ask you to do is subscribe to our channel first and then send your email in, but also give us a big thumbs up in the like section.
Well, that is it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions.
Now, remember to put this show into your calendar to join us right here on the live Australian Stock Market Show every Tuesday, 7 to 8 p.m.
As always, thank you for joining us, and we hope you've had a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.